Hey everybody, and welcome to Stock Abilities. I'm going to be covering the best ETFs for stimulus growth coming into the next years here. Now, although they are maybe still negotiating financial aid or not, depending on when you're watching this video, these are ones that I recommend for longer term growth that should kind of benefit from that aspect of that stimulus bill and, vaccine related stuff, all that kind of fun stuff here. We're going to hop right into it. The first one that I recommend is Jets. Jets, if you're not familiar, is an airline ETF. Its main holdings are a plethora of different airlines from Southwest Airlines, Delta Airlines, United, American Airlines, Cargojet, JetBlue, Allegiant. I'm not sure how to pronounce that one. Allegiant, probably. Yeah, that makes more sense. Alaska Air Group, SkyWest, and Air Canada. It's quite a diversification here for the ETFs. The most important thing with an airline ETF is that there's a lot of stimulus and a lot of push from both the Democrats and the Republicans to get financial aid to these sectors. So airlines themselves are relatively bullish in a longer term basis. You got to think basically this is an ETF that represents airlines. Airlines will always be utilized for things like transportation and cruise, or going on vacation for a cruise or something like that, or just visiting family. So holidays and a whole lot of fun, different things that benefit the airline sector. So to expect it to just go away is not likely to happen. Now there is risk inherent with ETFs. In this case, it took a big slam dunk when the volatility kind of crammed down. I feel that I could be seeing the mid 20s here coming up into within the next year. So that's a pretty good return on investment. You're spending basically $18 a share, or I'd wait till it's a red day again. So 17.70. But for video logistics purposes, let's say you bought at 18 and you sold at 25. That's a $7 return on basically an $8 investment. So that's a pretty good return. That's almost like 20-30% return in less than a year. So just thinking of that in that regard, a pretty safe bet for this ETF. The next one that I'd recommend, Defon, it's a little bit more risky because it's a 3x leveraged. If you're not sure what a 3x leverage is, I covered the video, but I'll give a basic rundown here of what it is here in this video. Essentially, 3x leverage, you run a much higher risk because it's based more on volatility than it's based on the movement of the underlying holdings. But you got Lockheed Martin, you got Raytheon, you got Boeing, you got Teledyne, TransDigm, General Dynamics, L3Harris, Northrop Grumman, Textron, and Howmet Aerospace all in one ETF here. So it's 97% aerospace and defense. It's a pretty strong, safe bet in my opinion. And at this point, it hasn't really rebounded very much. On a year to date, it tried to spike out and go a good bit higher here in June from the last stimulus bill. So this is more of a stimulus play and financial related. So in a swing or long basis, I can see this at $20 to $30 a share here within the next months. From a swing standpoint, it's a low risk. If you're getting into holding it for 4 to 5 months and it still hasn't really moved a lot, it's probably a good idea to consider getting out of it because there is a decay rate on these kind of ETFs, being as that they're a 3x leveraged. Now, this goes back into the same thing with LabDo and LabU. These are 3x leveraged ETFs holding a plethora of different biotech related companies from Immunomedics to Sorrento Therapeutics to Blueprint Medical, Exact Sciences, and Vitu, Seattle Genetics, Arrowhead Pharmaceuticals, and more. So this is an 100% weighted biotech ETF. Now you can play the bullish side for the hype up to the vaccine, and you can play the bearish side for the disappointing results or the sell the news aspect that is likely to happen here within the next weeks, months, depending on when a vaccine is actually finally released. Holding a longer term ETF like this, not the best idea. It's usually better on 3x leverage to actually consider selling calls or selling puts. In this scenario, LabD would be a good one to sell basically puts on because it tends to trend down, but I'd wait until we get some news on that, biotech vaccine, miracle cure, what have you, and then consider utilizing this for a longer term basis, whether you're shorting it or whether you're buying or selling puts or calls on this. I'm not entirely sure if LabD has this, but just for the essence of a 3x leveraged ETF, that you should be considering selling calls and puts on most of them and a longer term basis due to that decay ratio. Now you got this one here is the last one that I'm going to be covering in this video. This is Tapor. It's a transportation ETF, and obviously I don't know if you guys have been following with it, but FedEx and UPS and all of them are going to be benefiting a lot during the pandemic because they're going to be shipping out a lot more stuff because a lot more people are at home. And considering that factoring, you got, major holidays coming up that aren't going to have Black Friday. You have other things that aren't going to really be back to normal for potential years. So the growth potential on these kind of ETFs is pretty good. Now, once again, this is a 3x leveraged ETF, so there's a lot of risk at this point, but there's still some swing scalp opportunity. I would say to wait till maybe the 19 to 20 area if you can get in that again to consider utilization of this ETF. I see a lot of promise for future growth